All right, good morning, ladies and gentlemen. Today is March 29th, 2023, and I'm back with another Wednesday live show. I missed last week because I had to take someone to an appointment, but anyway, I'm back, and so it's been 2 weeks since I've done the show, and interestingly enough, I'm not sure how much we actually missed. Obviously, there's a lot going on with the so-called banking crisis, which they managed to solve pretty quick. But the market itself, let's jump right to the chart here. I like to start off with this chart where I've got these trend lines drawn from a while back, and interestingly enough, we talked about this little zone here being kind of no man's land, right? So, obviously the market broke above the larger trend line and came back and tested it. All was good. And then, this little dip back below it and below this trend line was a result of, the so-called banking crisis, which seems kind of interesting that they were able to resolve it that quickly. And especially, with Credit Suisse, what's going on over in Europe and that type of thing. So, a lot of times with these things in the past, they come back to haunt you, certain things. So, and I think we talked about a couple weeks ago how it just kind of makes sense that, well, what doesn't make sense is that the people running the banks that were struggling so much didn't listen to what the Fed was saying when they kept saying, they were embarking on a rate hiking cycle to beat inflation and they were going to keep raising rates and keep raising rates and all that. And I mean, you just wonder what in the world they were thinking. So, anyway, weird stuff, but I looked at around it, actually looked at some of the banks, the financials, the smaller banks charts last night, and they don't look so hot. I mean, they've not really come back to where they were, so that's kind of interesting. But anyway, we'll start with the S&P, zoom in a little bit here, and take a look at where we are right now. What's interesting is that as we speak right here, the market is kind of stuck in this no man's land thing, and it's trying to, it's trying to get back above this rising trend line. So there was tons of support. This little congestion area from back in December here held, and so it didn't break there. And so, the over and under being around 4,000. But the past couple weeks, we've just been sort of trapped inside of, this little quadrant of where these lines cross. And this is what I consider no man's land. So let me switch to a different chart. That's a little cleaner. The other thing here, so this is just a chart with the S&P 500 with the 200-day moving average, blue line, and the 50-day moving average, the orange line. And I remember doing a show where, back over here, I guess it would have been February, late February, where the market was kind of trapped in between the two, right? It was probably, I don't know if it was this particular day, but we talked about how the market was like trapped between the 50 and the 200. Thing about the 200 is that, it's kind of, it still looks like it's sloping down, but actually today almost looks like it's starting to slope back up, but for all intents and purposes, it's trading sideways and meaningless, right? Because you can see, I mean, look at the 200 day, all the times that the price is sort of sliced above and below it. So, generally speaking, when the 200 day is trending, it's a pretty good axis support and or resistance if it's trending up or down. But when it's going sideways, the market does have a tendency to sort of just chop around it and can't really do too much as far as determining anything by the 200 day. So the one sort of interesting thing, and the strength today I saw this morning being attributed to what they call end of quarter markup, right? So basically, a couple days from now, Friday, we're going to get the end of the first quarter here. So what I did want to do is try and draw a trend line. For some reason, my trend line's red. Let me change that. There we go. I think a black trend line is probably more appropriate here. But anyway, that's kind of interesting. Okay, so let's see. There we go. It's kind of interesting that the high today, or so far today, I should say. And by the way, the SPX, I usually look at SPY as far as open and close, but this is just kind of interesting. Trend line's a little bit thick, but that's almost ideal. Look at how perfect that is. Actually, it's pretty amazing. So you get a downward sloping trend line here, and the market just, right at the 50-day moving average. So you got to wonder, well, I wonder anyway, if, look at that. You got to wonder if, like, this little sort of rally that we've seen here over the past just few days, we had a pretty interesting little, sort of reversal here on, I guess that would have been Friday. Yeah, Friday the market opened down, looked like it was going to revisit the lower end here, and then by the end of the day, got a pretty nice little reversal rally. And then, the past couple days, yesterday I noticed was extremely boring day. I mean, it looked like everything was just sort of moving in slow motion. So we see that occasionally. It's weird how some days the market's fast and some days it's just seems like it's moving in slow motion and there was no participation or anything really going on, like everyone was taking the day off or something. It was actually kind of odd. So, and anyway, so in the very near term, we've got that little that little resistance here. I guess the market's going to need to pop through, but if it does manage to close above that, well then everybody's going to get bullish again, I suppose. Here's the crazy thing. Let me see if I can just plot. There we go. I'm going to plot a horizontal line, like basically right where the price is here, and then zoom back on the chart. That's close enough, 4012 and change. If we go back there, that's what I wanted to see was like how far back this goes, right? So that's right around 4,000, say. Goes all the way back to like literally this time, this time of year. I mean, give or take a few days, all the way back to 2021, which is pretty amazing. Like you can zoom back, and so that's back in 2021. Right around April Fool's Day was when the market first sort of broke out above 4,000, which is pretty amazing, quite frankly. So, 2021, 22, 23. So here we are 2 years later, back in the exact same spot where it was. And of course, this was the rally that this was the rally. There's the pandemic sell-off, and then there's the rally that was created by the Fed dropping rates to zero and throwing trillions of dollars into the economy to save everything from the pandemic. And so that's the rally that resulted in the situation we find ourselves in now with high inflation and and rising interest rates because interest rates were zero and they held them at zero. See, that's what everybody's talking about now is that, maybe the Fed made a mistake. Maybe they didn't when the pandemic hit because you never know. However, the sort of pain that, the thing about inflation, obviously, is that Inflation is a monetary phenomenon. This has been known all throughout history. Is when you increase your money supply, it waters down, the purchasing power of the existing money. That's not that's been around for ages and ages, right? I mean, they knew that back in the olden days. So, anyway, the Fed, I saw an article on CNBC saying that raising interest rates were not the way to fight inflation. I haven't read that yet, but that sounds kind of interesting because, my opinion, it seems like shrinking the balance sheet and raising rates is the only tools that the Fed really has to fight inflation. So I'd be interested to read that article. Anyway, my point here is that this battle at S&P 4000 has been raging on for quite some time. I mean, so there's last year, right? 2022. And by the way, there's the little peak up there, but you can see how many times that the S&P vacillated around the 4,000 level, and I know that I've mentioned quite a few times that S&P 4,000 is the over under, and so here we are again, right? It's hard to tell. It's hard to tell what the catalyst is to actually get this thing sort of moving in one direction or the other. Quite frankly, this whole range here is pretty tedious. It really is. If I 3900, put a trend line at 3900, that's been kind of a big deal too. That's another technical level that has been support and resistance. You can see where it was support back here, last fall, and then we hit the lows there, and then it turned out to be resistance, and then dropped back below it, and so we spent a lot of time sort of vacillating around that. But the weird thing is that these levels, this and even 4100, I hate to say it, but 4100 up here, is also kind of a resistance level. You can see back around the end of last year where the market sort of rallied up and poked at it a few times and kind of acted as resistance. And even still, even recently, back in early March, early this month, we got a little rally up to there, and then it got turned back. And so here's your banking crisis sell-off. Very short-lived, pretty shallow, quite frankly. So um, everything is just, and there's the next support level. So the market's like trapped in this weird sort of these weird zones. And I mean, they're not weird, they're just zones, right? And and quite frankly, to finish it off, you can see right here 4200. So obviously that's sort of a major. Well, in order for the market to get back to new highs, it's got to break above, obviously. That's the thing about technical analysis, that some technical analysis may appear to be voodoo to some people, and if you draw enough lines on the chart, everything's gonna eventually, you can kind of look at them and say, oh, well, this line here, this line there. But there's certain things about technical analysis, one of which is the price can't get back to the new highs without first getting above this recent high here. So that's kind of a law of nature. Anyway, so if you look at this, all these lines I drew at all these levels, and they're basically round number levels too, which is even more interesting, that everything seems to be, 3,800, 3,900. I know last year we talked about 3,900 a lot, as sort of the over and under, and obviously 4,000, big round number. But it's just funny that we happen to be right smack in the middle of I mean, just right smack in the middle of, this big giant range here. And it's honestly, it's kind of tedious. I mean, a range bound market between 3,800 and say 4,200, right, is the big range. Those are the ones I should probably have different colors. And then 3,900 to 4,100 is kind of the small inner range. And I mean, the price is spending a lot of time just chopping around in here. And so, um, it makes for kind of a frustrating market just because it's a very wide range. That's a wide range, 400 S&P points, and who knows? I mean, the market could stay trapped inside that range for long period of time. It needs some sort of catalyst to break it out one way or the other. Whether it breaks down and retests these lows. Now, in theory, I saw some stats that Ryan Dietrich, I guess, posted or whatever, that says that when the market spends a month trading above the 200-day moving average, like it did here, just barely, spends a month trading above it, that it never makes another bear market low, and that starts, like, I think that was since 1950 or something. So the thing about market stats is, a lot of times the start date on market stats seems cherry picked to me. So there was a similar statistic back. I forget when it was. It was like way back over here. Yeah, I think there was a statistic back over here that said something like whenever the market rallies 20% off of, a bear market low, you have a bear market, the market drops 20%, and then whenever it rallies like over 20% off of that low, it never makes a new low since, whenever the starting date is. And then so obviously back over here, it did make a new low, and so I looked back, at historical data and figured out that, that also happened like in the 30s or 31 or 32. And so I mean, yeah, modern day markets, if you do stats and you start at like 1950 or 60 or something, then you can get certain stats. So anyway, this whole thing about the market, not making a new low or whatever, take it with a grain of salt. It seems like it would take some sort of really disastrous sort of crisis to send it back to these lows, but hey, you never know. I mean, the market's just kind of crazy these days, and I see all these different. You could make a bull case or a bear case, and you could probably come up with 20 bullet points for each one, and so I don't think really anybody knows. And then the simple fact that we're trapped like right in the middle of this zone, and notice that the 50-day and the 200-day are right here in the 3,900 to 4,000. So if indeed there's a rally, if this is turning into a rally because the problems have basically been rectified as far as all this banking crisis stuff, then basically we'll just kind of watch and see if the market can continue this rally. I'm going to switch to a different chart here in a second because there's too much stuff on here. I haven't figured out, there's probably a way that I can clear all this stuff off the chart with one click, but I'm not going to attempt that right now. So, right here, like right where we are now, we're sitting right at resistance here, and there's there's today obviously, and then 2 more trading days left in the year. So it'll be interesting to see if the market gets turned back at resistance. So it's at sort of a major resistance level here, and yeah, obviously, a few pixels here and there, we could get a little fake out break above there and then reverse back down. We got this big gap, and I haven't even seen why the market rallied so much overnight. But I mean, I'm looking at, like, on my other screens, an hourly chart of the futures, and it's major resistance right here. This particular day, this was Fed day here, and that's why everything looks so crazy there, right? I mean, initially we had a spike up, and so yeah, and so, like, on the hourly chart, there's this crazy sort of spike up that was very short lived, and then of course the price reversed. So, but what's most interesting about that is how that spike up basically, matches the trend line that I drew from this high back here back in February across that high, and how everything's lining up. Sometimes you got to wonder, because it just can't be a coincidence that a trend line like this is so perfect. Now, of course, if I change this to a candlestick chart, it's going to look a lot different. But let's go to the weekly chart. Oh, that's not what I wanted. Too many lines on that. Yeah, so the weekly chart is always good. And at the end of the month, looking at the monthly chart, the weekly chart is always seems so much cleaner to me. So we got an inside week going right here, right? And of course, I could draw that same trend line sort of across these highs, the weekly highs, and it's like right there. So it's going to be interesting to see, where the week closes, and in theory, with an inside week like this so far. Now, I mean, weekly charts kind of is one of the things you look at after the market's closed on Friday. So it's going to be interesting to see if they can push it up above last week's high. It doesn't look like last week's low is going to break, but there's still a couple of days, so you never know. Anyway, so you got these kind of a lot of zigs and zags on the chart, and here we are, right at 4,000, right around 4,000, which is basically no man's land. So the last thing I wanted to look at here was the monthly chart, which is sort of the monthly chart always is really interesting, because we've had so much of this up and down, and we've had a lot of, like, you have an up month and a down month, and then that was like unchanged month. It looks like it might have been up a little bit, down, up, couple of downs, couple ups, and then we're back to down, up, and basically for the month, the S&P is not up a whole lot. It looks like, well, this month here, the what was the close? 39.70, it looks like. Yeah. So, yeah, this would have been, I guess you have to put the crosshairs on in order to get the the data from that month. So, we closed last month at 39.70. We're sitting at 40.11 right now, and so, I mean, 30 S&P points these days, not a whole lot, right? We could, depending on what happens in the next couple of days, you could give that back and have another down month. Oh, but what I was going to mention here is that, interestingly enough, and this is kind of what I'm talking about, like there we go. I wanted to get that MACD on the chart, because I actually have that on this chart as an indicator. But in theory, this MACD is kind of shaping up, kind of bullish. You can see that it's creeping towards the zero line. However, in order, it's just it's another lagging indicator. It's just mirroring what the price is doing. And so in order for, this MACD to go up, 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 and this would be a long time out. I mean, geez, if the market rallied back to the highs, right, it would probably take until this fall for this MACD to go positive on the monthly chart. Let's just see what it looks like on the weekly chart too. So the weekly chart, and the moving average, the MACD moving average convergence and divergence is basically just, if you had a couple of moving averages on here, like I think it's like 12, 26, 9 or whatever, but if you had some moving averages on here, it's just showing, the convergence and divergence of when they cross. So we're kind of flatlining here. That's what's really interesting too. When the market's trending, obviously, in one direction, that's when you get like a trend in the MACD. But you can see that it's just it's been positive since a couple of weeks after the low, that was the bear market low, right? It's about 3,500. So the MACD, went positive a few weeks later, and it's been above the zero line. But this last little, and this is a weekly chart, obviously. Yeah, and you can't see up at the top of the screen here. Sorry about that. But there it is. That's a weekly chart. I guess I try to conserve screen space by just showing the chart itself. But anyway, yeah, I mean, there's right smack in the middle of no man's land, and so there's a lot of overhead resistance, and then there's a ton of support below, and this week's range is really kind of tight, quite frankly, compared to most weeks. If you look back, this is, and of course there's a couple days left, so it's going to be interesting to see, if they can pull off like an end of quarter markup. So here's the daily chart. Switch to the daily, and same thing with the MACD, right? The market started pulling back, and the MACD went negative, and we got a down cycle. And then here, just right here, which would have been this day here, after the little bit of rally, MACD went positive, and it's still climbing. So in theory, we could put another little lower trend line here. We can draw that trend line across there, and so my point was, what I was saying a second ago is, the question is, can they pull off what you call an end of quarter markup? Remains to be seen. Let me pull this down a little bit. It's hard to tell, quite honestly. I mean, it's hard to tell. It would sort of make sense. It would sort of make sense that, I mean, it's got to break out of here relatively soon. So I think what would probably frustrate, as frustrating as this market seems to be, what would probably frustrate the most people would be for it to stay inside of this thing until for it to end the month. I'm sorry. It may poke out. We may get a poke out of here, out of the top. I was trying to get these to line up with, the beginning of April here. So, and of course, they're just not perfect or whatever, but yeah, I think what would frustrate the most people is for this thing to come back down over the next couple of days and just be sitting like, right in between these two trend lines to start next month. So that'd be kind of interesting, wouldn't it? That's it's very it seems kind of unusual. Now this trend line is awful steep, right? Normally I don't. The steeper a trend line is, And there's a couple of touches, but that's about as good as you can draw it right now. But that's most any trend line that's like at a 45-degree angle or steeper is generally not very reliable. So anyway, real quick before I wrap it up here, look at the financials here. The XLF, it's kind of, there we go. XLF's looking a little sketchy. A good reference point on a lot of charts is the pre-pandemic highs. So what you can see back there, the pre-pandemic highs, geez, were like, about 29, 29 and change. And well, we're at 31, but back over here is like 30. And so just barely hanging on. The KBE and KRE, those are the regional banks, smaller banks, whatever. Yeah, they're kind of interesting. I mean, they tanked, and then they're in this big sort of consolidation here. So whenever I see something like this, especially after a big move here, you gotta wonder which way it breaks out of this consolidation. So, but that's pretty nasty. That's pretty ugly. And I should have said, I see all these charts that people post, and I forget to save them, but I should have saved this chart. It was a chart of all the countries, developed countries, and how many banks they have, and number of banks. And the United States was like, 20 times as many banks as every other developed nation, which is kind of interesting. So there's KBE and KRE, and yeah, and they both look about the same. So the XLF obviously is, the larger financial institutions. So the financials, the sell-off is kind of sticking. That's the other interesting thing about this is, like I said last night, I looked through a bunch of these charts of, individual ones, like what was that one, PACW, right? Pacific. This was the one that I think not the rumor, but talk was that this is one that the next shoe to drop, so to speak. There's a handful of them, but and then you got like, just randomly off the top of my head, this one's kind of weird. I mean, that's some crazy price action there. It's actually held up, but the one that really, I think, sort of freaked everybody out was Charles Schwab, right? Because I mean, geez, you think about them as just like, one of the largest brokers or whatever, and so that was kind of unusual. But anyway, the thing of it is, aside from it's sort of stabilized, but it's not exactly, like bounced back to where it was. So, and then there's this U.S. Bank Corp. Yeah, this is one that I always thought was sort of well, I guess this is, just another good example of, the devastation in the sector there. And so, from a longer term perspective, these things have not really come back, right? So let's go back, look at XLF here. Yeah, I mean, obviously XLF's held up a lot better than, than the smaller banks and that, but the sell-off in the financials has sort of they're all just like in a zone now, kind of like the overall market. They're all just trapped in like this zone is much lower than it was. So it's going to be interesting to see how it plays out. And part of the reason for let's look at the NASDAQ real quick, because the NASDAQ is it was down a lot more from the high, but it's also rebounded quite a bit. That little the trend lines that I was drawing earlier on the chart. I mean, this thing, if this is a precursor to what the S&P is going to do, then that's a whole different thing. So all these indexes are kind of in their own little world. The Russell 2000, I was looking at this too last night. Russell 2000 is just a couple of sell-offs away from being back down near the lows of this whole cycle. So that's kind of really unusual. I mean, obviously there's tons of support right here, but I mean that these are like the bear market lows down here, right? And the Russell's just barely sort of hanging above that. So you got to wonder. And of course it makes sense. And speaking of ranges, range bound, this is even more of a range bound market than just about anything else. So the Russell likes to stay range bound. You remember back up here, back here in 2021, we would draw lines across the top and bottom. It just zigzagged around. You talk about what they call a bull trap, where it broke out here, and then that was it. I mean, if you looked at this, it spent almost a whole year trading in like a big sideways range, and then it broke out of that range, and theoretically that would have been when everybody would have said, hey, this is where you buy it here when it breaks out of this range. That was very short-lived. So anyway, this is kind of tells me that the market's not necessarily that healthy. And of course, they talk about how the larger cap stocks, just a handful of the bigger cap stocks are holding everything up. So, but I look through tons and tons of charts, and it's a mess out there. I mean, there's a lot of really super ugly charts. So, charts that are, stocks that have been whacked, destroyed, and are still like hanging down, near the lows. And some of them look like, well, hang on. It's the last one I want to look at here. So, kind of like ARK here, right? So you zoom out on this chart here, and yeah, there was sort of the D low in this, but whoops, what I wanted to do was, yeah, I suppose there's some potential here. They had Kathy on CNBC a couple of times recently, and she's just about as bullish on their prospects as possible. Interestingly enough, the S&P, peaked right here, like right at the end of 21, beginning of 22, and so if you look at that and you thought, well, geez, that's pretty nasty, from $100 to down to 30, and then pretty nice bounce. But it's interesting that this thing peaked way back at the beginning, or not the beginning, but near the beginning of 2021, and so pretty incredible. So it'll be really incredible to see, to follow this and see what it does. She's pretty concentrated in a handful of her largest holdings, but anyway, it is what it is, and the simple fact that and this was a pretty good beginning of the year rally. I mean, that was pretty tremendous, but you can see what's happening here. Just kind of fading down, and so this is kind of a barometer for kind of a bellwether barometer for the high growth, high momentum new age stocks. So I always like to look at it, see what it's doing. Same thing here. It's just kind of trading in a sideways pattern. So anyway, I guess that's my cue to wrap this up. People calling me, emailing me. So here we are. Keep your eye on what the market does over the next couple of days. See if we land in the middle here, and the breakout of this will be sort of the first clue. But so much zigzagging, tons of overhead resistance on all sorts of time frames. Like even if we break out of here, you got all the resistance up here and all the support down there. So might just be kind of a sideways, zigzag, frustrating market for a while. We'll just have to see. So anyways, thanks for tuning in. I'll see you back here next week.